is Mommy Beluga Investing.
Hi there, back again with me Rati in Mommy Beluga Investing. In this video, I'm going to analyze Apple Inc. with stock symbol AAPL. Some of my personal reasons are, again, I found this in Daddy Belluga's portfolio, my husband's portfolio. Unlike the reason that he put position in McDonald, he is not a big fan of Apple product. In particular, he doesn't use iPhone, at least at the moment. So this makes me intrigued. Why would he put a position in AAPL? Okay, so in this video, I will try to look from the perspective of the company's performance. After working on the numbers and company profile, a bit of the company profile, my quick take for AAPL are, first, it is an exponential growth company, growing company. Yeah, more like dizzying growth, both in earnings and market capitalization. 2, dividend yield is not that attractive as it has been, greatly eroded by the share price increase. 3, I feel small position in the ticker might be interesting, though. Yeah, this study case, the current video, provided me with a sense of super growth company. Okay, follow my video as I quickly discuss the company's profile, EPS since 2004, dividend and other numbers. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to get more perspective and learn more. Okay, before we get into the data, I read out the disclaimer first. Disclaimer, this is an amateur video. My main intention is to record my own journey learning and practicing investing from scratch. Over time, you may find that some inconsistencies on my analysis and conclusions. Please bear with me. My analysis is limited to the public data that I found, as well as my scope of my knowledge. Both of those items change over time. Okay, this video shouldn't replace any financial advice, neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision. But if you do your own research, I hope this video could be useful somehow. Okay, now let's start with a brief company profile. Okay, a little sidetrack. On my other video, Starbucks official name is Starbucks Corporation. Here, Apple's official name is Apple Corporation Incorporated. Sorry. Okay, after searching around, turned out they means the same. It is up to the companies to choose suffix Inc. or Corp. Okay, now let's return to Apple. Okay, Apple was founded by Steve Jobs, Steve Wozniak, and Ronald Wayne in 1976 to develop and sell Wozniak's Apple I personal computer. It was incorporated by Jobs and Wozniak as Apple Computer Inc. in 1977. Between then and now, there's so much stuff going on to the company. Okay, those include, first, the company went public in 1980, and then there's a leadership being ousted and brought back. Yeah, there's also a lawsuit with other Apple that are finally settled in 2007, which are too much for me to mention here. Okay, finally, this year marked 10 years of Steve Jobs passing. Okay, so with that, let's take a look at the company's performance. So here I plotted Apple Inc. earning per share for the last 17 years since 2004. I also added the horizontal green dash line as a guide to zero level. Earning below this line indicates that the company is recording a loss for that particular year. Like Starbucks, Apple Inc. have their financial year at the end of September. When I made this video, Apple just started their first quarter for financial year 2022 or 2022. So looking at the last 17 years, I can't see any significant dip that I can pick for my probe into. The first obvious dip was the one in 2016, but it's not that much either. Okay, since then, Apple's earnings have steadily increased and earnings have blown up since 2009. Okay, this chart alone could make one salivating. Okay, so next let's look at the obvious facts for shareholders. That's the dividend. Okay, to see the sensibility of dividend payout, so here I plotted the 3 layers of information. The first one is the dividend payout over the last 8 years since 2012, which I plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the points, I have annotated with 2 numbers. The first one is the numbers above the markers are the dividend payouts in US dollars, and the ones below are the payout ratios to the respective year's earning per share. As a comparison to the earnings here, I plotted back the earnings per share as a thinner line with the same color. Okay, over the last 8 years, AAPL dividend have been steadily increasing. In most cases, Apple Inc. distributed less than 30% of their earnings as dividend, so plenty of cash for reinvestment and development. From the news media, I could clearly see that the company is one of the tech leader. So far, I think Apple Inc. dividend policy is very healthy. Okay, next I will look at this dividend in comparison to their price, that is the dividend yield. Here I plotted the average dividend yield per year as the round markers. At each markers I place an error bar, which represents the range of yields over that year. The variation in a year is caused by the volatility level of the share price. The yield increased if the share price decreased and vice versa. We can see that we cannot rely on Apple Inc. dividend for passive income. The dividend yield is not much different from the bank deposit if we compare with the bank deposit here in Singapore, especially when it's driven by the exponential increase in share price. It will drive the dividend yield even lower. For those of you who are dividend hunters, this ticker may not be an attractive stock to hold. Alternatively, let's look at the Apple's market valuation. Yep. Okay, to see Apple's market valuation here, I plotted 4 layers of information. They are: the first one is the price, which represents market valuation of the company. It is also the easiest information that I can obtain. I can use the search term Apple Inc. share price and will pop with me with this kind of graph. But price alone is sometimes misleading for the value of the company and its prospect, as we all know. So I'll include some other fundamental indicators to help me to decide. The second layer of information is the 10 times earning multiply, which here I plotted as a dashed green line. 10 times earning multiply can be considered as the price where the price to earning, that's the PE ratio, is 10. For me, I consider 10 times earning multiply has 2 purposes. The first one is that it indicates the price where I have higher chance to break even within 10 years. You could put 5 times earning multiply if your investment horizon is 5 years. Second, as a consequence for the first reason, I'll consider share price above 10 times earning multiply to be expensive. The third layer of information is 15 times earning multiply. With the same principle as the 10 times earning multiply, price above these indicators usually I will deem as expensive. Here I plotted the 15 times earning multiply as a dashed yellow line, just like the traffic light. I'll start feeling nervous if the price crosses this line, particularly for non-growth company. The fourth layer of information is the 20 times earning multiply. Here I plotted as a dashed red line. I will consider the share price to be super expensive if it ever crosses this line. Okay, as a note, for non-growth company, I consider to cut down my position if this happens for non-growth company. Okay, now let's look at the screen. Look at what happened here with AAPL stock price. Yes, what we can see here, with a meteoric rise of the company's performance, so does the market valuation. Historically, Apple's PE is way above 20 earnings multiply, except those in early 2021, early this year. Apple share price, touched by 20 earnings multiply for the first time due to the surge in earnings. Since then, the quarterly earnings have been dropping and it is followed by the share price correction, but not that much. So overall, it is actually an interesting company, at least for me. Okay, so now we come to the reasonable price. So here I place price annotation based on the latest earnings report. It is clearly my conventional rule for P10 to P20 will not completely work when we are dealing with this kind of company, hyper growth companies such as AAPL. Looking at the trend, the share price will be a bargain even for $104 US dollars per share. Yeah, at the 20 times earning per share. Yeah. I'm going to be a little bullish here that my sleep well price is actually around 120 US dollars. I feel that this price, $120 per share, will provide enough space for upswing as well as some buffer for downswing that I can stomach. Okay, now let's compare to the real price. Yeah, when this video was prepared on the 22nd of October 2021, AAPL share price sits at 148.69 US dollar. A bit expensive compared to my sleep well price, but it's probably not too far off. Okay, now let's wrap up. Conclusion. AAPL. It is an exponentially growing company, more like dizzying growth both in earnings and market capitalization. Yeah, that's the first one. The second one is dividend yield is not that attractive as it have been eroded by the share price increase. 3, though, I still feel a small position in the sticker might be interesting. The current analysis, the study case provide me with a sense of that this company is on the track of a super growth company. We are not sure how long, but currently we can see that trend. Okay, that's all for today. Thanks for watching. Don't forget to leave comments, and if this video is useful for you, please subscribe to my channel. It's free for you to do so, and it means a lot for a beginning YouTuber like me. Okay, that's all for today. Bye-bye.